and welcome. You're watching Market Fatafat on ET now. I'm Shrishi Sharma and with me is Muni Motiwala, and in the next one, our viewers, we will be telling all the stocks that are seen to be buzzing either on the back of the news flow or on the back of the technical. So let's get started. But before coming to the list of the stocks, let's have a look at what the markets are up to. So Winnie, first day of the week, but it seemed to be a bit of a wobbly session coming in for the benchmark indices, although Nifty is holding itself in green. But for the bank Nifty, sometimes green, sometimes red is what we are seeing on that index.
Absolutely, that's the word coming in today. A bit wobbly there for the markets, but nothing exciting, but not bad as well. You know, still holding on to this greens. Look at the Nifty, 0.3% gain almost is what Nifty is holding on to. 17,600 above those levels is what the Nifty is at. Sensex 2 holding on to gains of almost 0.3%. Yes, not at the day's highest point, but around those levels yet as well, both the Sensex as well as the Nifty. When you look at the benchmark indices, they're doing 0.3% gain, while the broader markets actually are holding on to similar levels of gains as the benchmark indices, following in line with the benchmark indices. So the Nifty mid cap, small cap space also holding on to a bit of a green today. 0.4% uptake for the Nifty mid cap, small cap space also up almost 0.3% in trade. Now, like you mentioned, Nifty Bank, that's not doing well. You know, it did try to go in the green, but yes, after that again fallen down and down almost 0.2% in trade. Sector wise, other than that, even the Nifty FMCG space is not holding on to any gains as well. Top gainers in the space in terms of sectors, we have Nifty Realty, which is holding on to gains of around 3.96%, while Nifty Energy and Metal also holding on to gain of more than 1% in trade as well. That's how the market is looking like as of now. Obviously, the market is more in the favor of advances than in the decline. So keeping an eye out on the markets, holding on to a bit of a green as of now, Shrishti. But on that note, let's just get started with all the stocks that are buzzing in trade. Let's bring on board Chavan from on the technical analyst front, while from the research team today we have Ashesha as well as Vamakshi joining in with us. A very good afternoon to all three of you all, and let me start then with the first stock that's going to be in focus, Shrishti. Yeah. And obviously, let's talk about Titan today because Q4 update has come in. Earnings season is just around the corner. So we have Titan, which came out with its Q4 update. When you look at it, the jewelry division has seen a good growth, strong growth of 23% on a year-on-year basis. But do not forget that it has been a bit of a low base that is coming in for Titan in terms of the jewelry business. Jewelry business accounts to around when you look at it, 80% of their revenues as well. And compared to peers, Titan surely has been doing well in terms of jewelry business because Kalyan Jewellers, the growth has been only 16% is what is coming in as per the Q4 updates. As of now, a sequential basis, jewelry business has seen a downtick of 21%. Company highlighted that Jan and Feb saw a strong demand coming in, but in the month of March, they saw a bit of a softening in terms of the demand for the company. What we'll be watching out for is how is this spike in the gold prices that we saw in the month of March, how is that going to impact going forward, what's the trend we're expecting from them as well. And overall, Q4 growth mainly was led by buyer growth, that is both new as well as repeat growth and increase in ticket sizes as well. And other segments, watches segment also saw a strong growth of 41%, while even the eyewear segment saw a growth of 22%. Emerging businesses also did quite well for the company, so those are also leading the growth for Titan this time. Stock is up more than 1% in trade as of now.
Okay, moving on to the stock number 2 in focus, and from the pharma space, Cipla is one such counter, and the news flow says that the company has signed a perpetual license agreement with Novartis Pharma. That's the Switzerland headquarters company on 10th of April to manufacture a diabetic drug named Galvus. That will be a combination brand used in the treatment of the type 2 diabetes. From 1st of January 2026 is when Cipla will start the manufacturing, and now the agreement is subject to the satisfaction of the certain condition because 2026 is still far away. But during the interim period, Cipla will continue to market and distribute this branded product in the Indian market. Talking of Galvus, this is amongst the prominent brands in the oral diabetic medication category, has a potential to contribute significantly to Cipla's portfolio in the diabetes care, having reporting a sales of 268 crores, and the deal is expected to further bolster Cipla's position in India as one of the top players in the diabetics category. That's the news flow, and the Cipla stock is now seen to be moving above that 900 levels.
Let's move on and talk about Hindalco. How is that looking like on the chart, Sameet? Because in the last 3 months, you know, just at the beginning of the year, somewhere around, it was around that 500, about that 500 mark. Now it's come down and near those 400 levels. How is it looking like on the charts? Is it an attractive buy?
See, as you rightly pointed out, this stock has done nothing in last 3 months. In fact, it has corrected more than 20% from the levels of 500. It seems that recently the stock has formed a good base around 380, 390, and in last couple of days we have seen early signs of revival. And today, since morning, the stock has been attracting strong buying interest. If we look at it on the daily time frame chart, stock has already broken out from its hurdle of 410, 411, and the kind of volume activity that we are witnessing since last couple of hours, it suggests that the stock is due for some sort of bounce from current level. So 422, 425, these are the next levels to watch out for. And as a disclosure, we have recommended in the morning itself to our clients through call options. We have recommended 410 call options, and we expect further bounce, probably 425, 428. These are the next levels to watch out for.
Okay, moving on to the next stock in focus, and today what we are seeing is that the small and the mid-cap space on the NBFCs is doing quite well, and one such name is Credit Access Grameen. Stock is seen to be buzzing. Vamakshi, tell us what is the news flow?
Well, Srishti, the stock is abuzz on the back of a Q4 update that came in from this counter. They were seeing that there is some strong growth momentum coming in for the stock, both in terms of value as well as volume. And they're also seeing some very strong growth as far as client addition is concerned. Now, they have acquired 5.4 lakh clients in the fourth quarter, which is an uptick of nearly 80% on a year-on-year basis. But more importantly, it is an uptick of nearly 74% that has come in on a quarter-on-quarter basis. And with this, the total client base now stands at 43 lakh for the company. AUM has also seen a growth of 27% on a year-on-year basis, which is higher than what the market was anticipating. AUM growth is largely driven by definitely the strong growth that we saw in the client base, plus the 12% year-on-year growth that is seen in the loan size per customer. They were also expecting ROE of nearly 23%, and that has despite lowest interest rates that are offered to borrowers. On the back of that, Investec has actually maintained a buy rating on this counter, upgraded its target price to 1,225 per share, and that is the reason why the stock is up in trade. Definitely, it has cooled off from the day's highest point, but nevertheless, it is holding with gains of around 1% as we speak.
On the back of a Q4 update, Credit Access was buzzing as much as 5 to 6%, but yes, still holding on to gains over there. Moving on, let's talk about Shyam Metallics. Shesha, what's the reason for this one being a buzz today?
Yes, Shyam Metallics is also in focus on the back of operational update data that the company informed the exchanges about. In fact, strong data is what the stock is reacting to. It is holding on to gains of over 2%. Long steel segment has seen a volume uptick of about 49.3% in the fourth quarter on a year-on-year basis. Realizations have declined a tad bit by about 2.3%. Remember, this segment contributes about 40% of the total revenue of the company. As far as the pellet segment is concerned, over here, volumes have declined by about 6%, while average realization is down by about 16% on a year-on-year basis. But important to note that the segment which contributes about 40% of the total revenue has seen an uptick as far as volumes are concerned of about 50% on a year-on-year basis, and that is what the stock is reacting to, over 2% higher in trade for Shyam Metallics.
Sticking with metals, and Sameet, one more metal counter on your radar, that is JSW Steel. Is that a buy yet again?
Yes. See, after a long time, metal stocks are doing some action, and JSW Steel, which has cemented its position around 660, 670, which is, which coincides with the 200-day simple moving average. Stock is on the verge of a, breakout from a bullish black pattern. So we anticipate this breakout to happen in a day or two, and the stock can head towards 710, 720 over the next few trading sessions. So yes, at current level also, it's a good buy considering the overall risk to reward ratio. As a trader, one can now keep a stop loss somewhere around 682 and expect a move towards 710, 720 in next probably 2 to 3 trading sessions.
Okay, that's the word coming in on JSW Steel. Keep an eye on those levels. 710, 720 could be the near term that we could be watching out for JSW Steel. Moving on, let's talk about Bharat Forge. Now, why is this one in focus? We're seeing is the stock is trading at the lowest levels, around those lowest levels that we've seen coming in since October 2022. Why? Because actually we have a note that has come in from Kotak Institutional Equities that has actually downgraded Bharat Forge. Now, they're downgrading Bharat Forge to a sell from a previous reduced rating, as they expect moderate revenue growth for the company over FY23 to 35 expectations. Though, new new business will be the key growth driver for the company. They see a limited growth prospect in its core segments given that the risk of electrification and elevated competitive intensity from domestic companies. A decline in Class 8 auto inflows and moderation in domestic auto demand remain the near-term headwinds for the company. So they have trimmed their face value for Bharat Forge to 660 rupees as well. Keep an eye out on that one. That's the target that we should be watching out for. But yes, a downgrade for Bharat Forge from Kotak Institutional Equities.
Quite a low target price, Winnie, almost 100% lower from the current
100 rupees lower. Yes.
100 rupees lower from the current market price. But sticking to autos, and Sameet, M&M is the counter on your radar. Tell us, what are you spotting out there?
Entire automobile space has been buzzing since last 3-4 trading sessions. M&M is the one stock that has been a laggard in last couple of months, but the kind of price action that we witnessed on Thursday and a follow-up move today, the stock is clearly on the verge of a good bounce back move. So it has already traversed its 20-day moving average, which is placed around 1180, and looking at the RSI smoothen oscillator, we expect this stock to give a decent relief move. So 1220, 1240, these are the next levels to watch out for as far as M&M is concerned, and probably we are likely to see a good catch-up move in this counter over the next 1 or 2 weeks.
Okay, moving on, and let's shift focus to the city gas distribution companies, as in the city gas distribution companies have actually cut their gas prices as the new pricing formula comes into play after the Union Cabinet on Thursday approved the new domestic natural gas pricing formula recommended by Kirit Parikh Committee. On the back of this news flow, MGL, Adani Total Gas, Torrent Power, all these companies have announced a price reduction. For the case of MGL, have announced a CNG price reduction of 8 rupees per kg and the domestic PNG by rupees 5, wherein for Adani Total Gas have reduced the CNG prices by up to 8.13 rupees per kg, and PNG prices have been slashed by 5 rupees per kg, and Torrent Power, similar the case, 8 rupees has been slashed by onto the CNG front, and Torrent Power has more than 50% stake in the Torrent gas sources is what the reports are saying. So all on the back of this news flow, all these companies are seen to be buzzing, wherein for the likes of Adani Total Gas, it's reacting positively to this particular news flow, holding up a gains of 5%.
Okay, but Shristi, we also spoke to Kirit Parikh himself to understand, what this actually means in terms of the new pricing norms for the final consumer. What would be the impact on that today as well? So let's go across and listen in.
See, the one is to recognize that currently large amount of LPG is imported. So if the LPG price goes up, then the consumers have to pay a higher price. Now, what we have done, the consumer price would remain lower than that LPG price. CNG price would be less than that. So if you, for example, if you are cooking with LPG cylinders and if you change over to piped natural gas, you will find that your monthly bill is lower than what it was otherwise earlier with LPG. And the same way would be applied to the CNG users' vehicles. If, for example, even if you are driving a diesel vehicle with a Bharat standard 6 emission controls, BS6 emission controls, your emissions of CO2 and particulates both would be higher than that of a vehicle which is using compressed natural gas. So it is a desirable use because it will reduce urban air pollution or indoor air pollution in kitchens. And that's why I think in both the cases, the price range is such that it will always be less than the competing fuels that are available.
Okay, but sticking with the city gas distribution company, Sameet, the counter on your radar is IGL. Tell us, what are you spotting out there with all these city gas distribution companies majorly seeing an uptick? Is there a buy coming in on IGL?
Yes, certainly yes. The entire space is on a roll since last couple of days. IGL, has spiked up in last couple of trading sessions, more than 10% rally already, and the kind of price action that we are witnessing with a broader view, the stock has already broken out from its multi-month resistance level. So from here on, the kind of volume activity that is supporting the price action, the up move, we expect the stock to head towards the 490, 494. So And as a disclosure, we have recommended this to our clients as well. So 494 is our positional target, 492, 494, and we expect probably in a week or so this IGL would move higher. And considering the price and volume activity, the momentum would be quite sharp as far as IGL is concerned. Any dip from current level towards 460 would make it a good risk reward ratio. And as a trader, one can now keep a stop loss of around 444.
Okay, keep an eye out on those levels. Stop loss of 444 for IGL. Vamakshi, Century Textile as well as Sudarshan Chemical, both these stocks in focus today.
Well, absolutely, Vinny. Both these counters are in focus, but we're seeing that Century Textiles, in fact, is gaining in trade, while Sudarshan was down in trade the last time I checked. Now, the reason is that Birla Estate has forayed into the real estate market of Pune, and in fact, Birla Estates is the wholly owned subsidiary of Century Textiles. Now, there is an acquisition that has come in from Birla Estates. They've acquired 5.76 acre land parcel in the central business district from Sudarshan Chemical. This land parcel has a development potential of nearly 1.5 million square feet, and in fact it also has a revenue potential of over 2,000 crores. So given this news flow, we have Century Textile in trade as well as Sudarshan Chemical. Century Textile is up nearly 2%, while Sudarshan Chemical is up nearly 0.5% as we speak.
Okay, moving on, and Sameet, from the auto ancillary space, Apollo Tyres is the counter in focus, but every time we have seen the counter making a U-turn from 330 odd levels. This time around, you see that this particular level is broken, and is that a buy coming in on Apollo Tyres?
Certainly, yes. Stock has been, giving some resistance around 330, 340. Stock has corrected recently, went into a consolidation mode, but this particular stock has cemented its position slightly above 300. 305 seems to be a sheet anchor for this particular counter. After a long consolidation, last week we saw some sort of buying interest emerging around 310, and stock has already started its upward rally. So it is likely to resume its high degree upward trend. And this time, the kind of price and volume activity that we are witnessing, the probability is quite high. This time this stock would surpass 330, 332 and would head towards 340, 345. So, we have a buy on this counter. We have recommended through, this particular counter through call option, and we expect a good move in probably next 1 or 2 weeks in Apollo Tyres.
Okay, good move expected in Apollo Tyres in the next 1 to 2 weeks. Let's keep an eye on that one. Ashesha, coming to you then, IIFL Finance also in focus. What's the news for here?
Yes, this counter is in focus on the back of fundraising plans that the company has announced. In fact, the company informed the exchanges that IIFL Finance has secured $100 million of fundraising from Export Development Canada and from Deutsche Bank. It will get about $50 million from Export Development Canada and the balance $50 million from Deutsche Bank. They said that the replacement cost of the fresh borrowing at a competitive rate is expected to result in significant savings in borrowing costs as compared to the previous interest rate, and that will probably help the company aid the bottom line. In fact, the commentary is also quite optimistic. The management said that these funds are long-term in nature and will help the company further strengthen their ALM position and support their continuous growth across all of their core businesses. On the back of this fundraising plans that the company has announced, the stock is in focus today.
Okay, moving on, and Sameet, once again coming to you, Tata Chemicals finally trying to cross that 1,000 odd levels. But what are the levels that you are watching out for Tata Chemicals?
So this stock has been a slow mover recently, went into a long consolidation phase. If we look at it from a slightly broader perspective, 1,020 on the higher side seems to be a very strong resistance. Lower side, whenever this stock reaches 950, 940, some sort of buying tends to happen, and this is clearly what we witnessed last week. Slowly, gradually, we expect this stock to challenge 1,020, 1,030. But once this stock surpasses 1,020, 1,030, it would certainly unfold a upward leg rally probably towards 1,060, 1,100. So overall, the chart structure looks quite promising, but we would rather wait for a breakout to happen beyond 1,020. And if that happens, then 1,060, 1,080, these are the next levels to watch out for.
Okay, 1060, 1080 are the levels to watch out for if we see a breakout. So keep an eye out on that one. That's Tata Chemicals. Let's move on and talk about Voltas. Yes, it's become very hot in Bombay, but maybe it will become easier to buy an AC because Voltas is taking some price cuts there this time around for the AC market and AC industry. Now, overall, let's talk about the industry first because on an average, what Credit Suisse mentioned in his notes that there has been a marginal decline in terms of prices this time around. That's in calendar year 2023, the summer this time around. So no price increases have been taken so far by the AC industry producers, manufacturers for this year versus last summer. Now, in terms of when you look at it, what Voltas has done, they have taken price cuts maybe to match in terms of the price offered by Havells, and this maybe could have a potential impact in terms of the margins of the company. Voltas seems to be attempting to create a bit of a pricing gap again versus brands like Daikin, Hitachi as well as LG as well. Now, similarly, we have seen that trend happen only in calendar year 18-19. Calendar 2022, there was no pricing gap. And again, this year, there's a pricing gap of around 2,500 that has opened up between the average prices of all other brands versus the Voltas pricing. LG also has actually reduced prices by 3%, and Samsung also seems to have reduced its competitive intensity and taken a slight bit just in terms of the price increase there. So keep an eye out on that one. Credit Suisse is cautious on Voltas. They're maintaining an outperform rating on Havells.
Okay, but moving on, and today if we see the cement stocks are also seen to be buzzing from the likes of Ultratech, Dalmia Bharat sitting at 52-week high. Sameet, on your radar is Grasim Industries still far from its 52-week high levels, but do you see that coming?
We have been a bit on this counter since last 3 weeks, and ever since the stock managed to find support around 1550, it had formed a good a bullish reversal pattern. From there on, the stock has already rallied. It has managed to surpass its intermediate hurdles. 1620, 1630 was a strong resistance zone. It has already surpassed it. The volume activity has risen substantially, and today we are seeing a good follow-up in this counter. So overall, the chart structure looks quite promising. 1740, 1760 is clearly on cards. So we are a bit on this counter, and any decline from current level probably towards 1680 would be a good buying opportunity in case of Grasim. As a trader, one should keep a stop loss of around 1660, and as I said, next levels to watch out for would be around 1740, 1760 for Grasim.
Okay, moving on to the next counter in focus, that is Adani Wilmar on the back of its Q4 business updates. And this time around, what we have seen, the company reported a standalone volume growth in high teens on a YOY basis. The edible oil business saw a growth of almost a flattish growth on a YOY basis, while the food and the FMCG business saw an uptick of 40%, and the industry essentials saw volume growth of over 60% on a YOY basis. Now, the company continued its growth story with a year-on-year volume growth to close to 14% in FY23. They have also crossed 55,000 crores of revenue for the year, and the supplies of the imported edible oils have been smoother during Q4 FY23 compared to the earlier part of the year. That's the view coming in. But talking about the outlook, they expect the demand for the packed oils and the staple foods to remain healthy, but the stock is trading almost flat right now on the back of this operational update by Adani Wilmar.
Okay, let's talk about a life insurance name on the charts. And Sameet, you picked out ICICI Prudential Life for us. Yes, post the budget, we've seen that bit of a fall coming in the life insurance companies. They were not doing anything exciting. But when you look at ICICI Pru for the last 1 month, has managed to see some bit of a gain there. Does that indicate anything that it could see a sharper recovery going forward, or should we wait for a correction if one is looking to buy?
See, recently this stock gave a good recovery from the levels of 380, so that becomes already 15% recovery from its recent lows. So after reaching its important resistance zone of 440, we are seeing some breather. But overall, the recent price action suggests that from here on, this stock is likely to head higher. So there could be two possibilities: either wait for a breakout to happen now beyond 445, that would confirm a breakout, and from here on, then 460, 470, these are the next levels to watch out for. Or else this stock gives a decline, a profit booking towards 420. That would again be a good buying opportunity. So either wait for a breakout to happen beyond 445, or else buy on a decline towards 420. 410 should be a good support level, so one can keep a stop loss below 410 and expect a good move probably towards 460, 470 over the next 2 to 3 weeks in case of ICICI Pru.
Okay, moving on to the next stock in focus, or rather a sector in focus, Vamakshi, the sector you track closely, real estate, is clearly stealing the show from that pack. Let's talk about Godrej Properties. What's happening here? Tell us, the viewer.
Well, absolutely. The entire real estate basket is in focus, but particularly Godrej Properties is seeing some stellar gains this time around, and that is on the back of its Q4 numbers. Now the company has come out with an operational update, and they have achieved the highest ever quarterly as well as the annual sales. In Q4 FY23, bookings stood at 4,051 crores, while for FY23, the entire year, booking value grew by nearly 56% to 12,232 crores. Annual booking, in fact, is nearly 22% ahead of the full year guidance that the company had given. Definitely, we're seeing some strong sales growth come in, but this strong sales performance has in turn translated into record collections for the company as well. Cash collections for FY23 have grown by nearly 41% for Godrej Properties, and this was backed by a strong project completion pipeline that the company had of over 10 million square feet. In fact, it is also turning out to be the best ever year for the company in terms of business development, and given all these factors, we also have a note that has come in from Motilal Oswal, or they've in fact upgraded their rating on Godrej Properties to buy, and the target price they've given is 1,575 per share, and that is the reason why the stock is soaring away in trade today, up nearly 8%.
That's Godrej Properties for you all. Keep an eye out on that one on the back of its Q4 update. Shesha, but coming to you, you've picked out the sugar pack for us, and what's happening in the sugar stocks? Why are they in focus today?
Well, yes, in fact, sugar stocks have been in focus for the last many trading sessions. One of the reasons, of course, is the surge in sugar prices that we have seen both in the domestic market as well as in the international market. In line with the surge that we are seeing in international market, domestic sugar prices have also now surged. Domestic sugar prices have seen an impact. Retail prices, in fact, have risen above that 45 rupees per kg mark. Apart from this, we also have some commentary that has come in from Food Secretary with respect to exports, with respect to sugar exports, where he says that India may not allow additional sugar exports. Surge in sugar prices, both domestic and international, coupled with the fact that sugar exports, additional sugar exports for the current sugar season may not be allowed, is why sugar stocks are in focus today.
Okay, that was the stock number 20 for you all. But for this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back. Welcome back. You're watching Market Fatafat on ET Now, a show where we tell you all the buzzers in trade right now. But let's move on and welcome on board Kunal Rambia from the streets. Hi, very good afternoon, Kunal, and let me come to you for a first talk, and that is from the real estate space, DLF. We have been seeing stellar moves in this particular sector, rather. But talking specifically of DLF, already up 13.5% in the past 5 days. But do you believe there's more steam left for more run-up in this particular counter?
Hi, very good afternoon to everyone. So if you look at the DLF performance, it's been in the sideways consolidation since December, the beginning of December. And the consolidation breakout was at around 380. We saw this counter going up by almost 4.5% in the previous session, and today it's up by 6.5%. It's a perfect breakout candidate, and this counter may just continue its rally going forward. So initiating a buy at the present level also would make sense, and at the same time, if this counter retraces back to 395, I think that can be more favorable entry for the positional traders. The stop loss on this counter will be 380. I think this counter is heading for 450 mark very soon.
Okay, that's the view coming in on DLF. Let's talk about Tata Motors. And Shrishti, yes, I've taken this from you today. It's buzzing in trade, and I'm very happy I've taken this. So we have obviously the numbers, sales numbers, the JLR data that came in for Q4. While other than that, we have a note coming in from Goldman Sachs as well. They've actually upgraded Tata Motors to a buy from a previous neutral rating, and they've given a target price of 550 rupees per share. But they also are highlighting that the stocks are trading at a 7.4 times PE on 25 FY your estimates compared to the mean as well. Now, what Goldman is highlighting is that they're seeing an improving volume outlook for JLR, that is 70% of Tata Motors top line, which will obviously lifting, so this is what is leading to them in lifting their FY24, FY25 expected EBITDA by 15% and 16% respectively. What they're also saying is that the market is actually underestimating the JLR EBIT margin potential, and that is why they're quite positive on this one. They've upgraded the stock to a buy, and look at the stock as of now as well, up 5.36% as we speak.
Well, yes, absolutely one of the Nifty 50 stock gainer today. But this one is actually on the radar of Kunal as well. Kunal, tell us what are the targets coming in for Tata Motors?
So here my observation is little different, and that is that if you look at the whole performance right from November 2021 so far, this counter was making a symmetrical triangle kind of formation, and that was in the with the negative bias in fact. Today it gave an attempt to cross that. Decisive breakout was seen in the morning, but right now it has given up its gain from the peak level that, and the resistance seems to be turning out at 475. You can see right now it's trading at 460. So if Tata Motors sustains near the high and crosses 475 mark, yes, it's gonna be a perfect buy. It's a technical breakout, and then we expect the target of 550. But if it fails to surpass that level, then that can be the good level to initiate the shorts. I think the counter may come back to 420 mark. So it's on the dicey mode right now. Wait either for the breakout of 475 or say remaining near to the present level for next 2 days. We can initiate shorts also. It's a contra trade right now.
Okay, so levels to be watched out for Tata Motors, either on the breakout or on the breakdown side. It can give you an opportunity. But switching to the banking space now, in Bandhan Bank is the counter in focus on the back of a brokerage upgrade coming in. For this particular bank, Goldman Sachs has actually upgraded its rating to a buy now from a neutral rating earlier, where they expect a 31% upside from the current market price. And they believe that the bank is finally nearing its earnings cut cycle and likely to inflect into the higher ROA and ROE bank over FY24 as well as FY25. Now, the collection efficiency has further improved to 98.5% in the month of March, and the bank has realized recovery from selling the MFI portfolio twice since December 2022, is what Goldman Sachs is highlighting. And on the back of this particular brokerage report, the stock is in focus, but nevertheless still holding itself in green with a gains of 0.4%.
Okay, let's keep an eye on that one. But let's talk about Neogen Chemicals. This one is buzzing in trade as well today, Vamakshi. And what is the news flow here? Because we've not seen such a sharp up move coming in. The stock is trading almost at the highest level since Feb 2023.
Well, Vinaya, sources are suggesting that Neogen Chemicals is set to announce a tech transfer agreement with Japanese major today. Now, the tech transfer will be for manufacturing of lithium electrodes under the PLI scheme. Neogen Chemicals is likely to manufacture lithium electrodes for Ola Electric, Exide, Amaron domestically. In fact, Neogen has scheduled a press conference today itself at 3:30 p.m. in Mumbai. So that is what the sources are suggesting us about Neogen Chemicals, and that is the reason why this stock is in focus today, trading at the day's highest point, up 7% as we speak.
Okay, so press conference today, and we'll be keeping an eye out on that. But Kunal, coming to you for the next one, BHEL is the stock that you have picked up. Tell us, what are you spotting out there?
So again, if you look at the on the daily chart, this counter was up by around 3.5% in yesterday's session. Today it continued the rally, but this counter is still not coming out of its consolidation, the sideways consolidation. So it's a conditional buy. Let's wait for the breakout of 73. Presently it's trading at 71.5. If this counter surpasses 73, I think this can completely bottom out and we can see the levels of 80s very soon. And in that case, we'll maintain the stop loss at 71.5. But if it fails to surpass 73, then this can be a contra bet again, initiating the shorts with the stop loss of 73 and target being 67 again.
Okay, keep an eye on those levels. How is this actually going to play out is something that we'll watch out for. Let's move on, Ashesha, and talk about Nazara Tech. Why is this one in focus today?
Well, yes, gaming counters, the likes of Nazara Tech and Delta Corp are in focus, and that is because new regulations for online gaming companies are now into place. Self-regulation model has been applied for the online gaming sector. SROs or self-regulatory organizations will approve games that can operate in the country in accordance with rules. As far as GST rates for online gaming companies are concerned, group of ministers will be reviewing GST rate on online gaming, casinos and horse racing. This will happen somewhere in May or June this year, and it is likely to remain at 18% on gross gaming revenue. In fact, we also spoke to the management of Nazara Tech earlier in the day, and they said that new regulations to protect online gamers is a positive step for the industry. GST on online gaming is likely to remain at 18% on gross gaming revenue, and this will be a big positive for the sector. So on account of these new regulations that have come into place, both of these gaming counters, Nazara Tech and Delta Corp, are in focus today.
Okay, moving on, and let's shift focus to the metal counters now. Kunal, we are seeing good up move coming in on all these metal names. Hindalco is the stock that you have picked up, but a very close resistance level is 82, which is coming out of for this particular counter. Do you expect this particular level will be breached in this up move?
So we discussed about this counter on the last Monday also. That was trading at around 78. And we had discussed that this seems to be a bottoming out counter. And what we are witnessing now is since 6 days, this counter made a bottom. The final bottom was around 75.5. This counter is right now trading at 80.25, 80.3. So I think this is completely bottomed out counter. The trend is really very slow. So yes, it will take a lot of time to reach its target level, but on the the markets where the markets are kind of lackluster, I think this can be a safe bet to play. So the target on this counter which I'm setting is now 86, and the stop loss right now is gonna be 78. So it's just 2 rupees stop loss from the present level with a target of around 86. One can initiate a buy on this.
Okay, let's move on and talk about another real estate name, and this one is Soba. Now, this one is also in focus on the back of a Q4 update that has come in, a strong update coming in over there as well. And we've seen the stock price jump clearly because the company had reported its best ever quarterly sales in 3 months ended March 2023. Highest quarterly sales, improved average realizations are some of the key positives coming in there. They've achieved its highest ever annual sales of rupees 5,198 crores, which is up by 15% as well. They've recorded the best ever quarter sales, like I mentioned, in terms of value as well, which is up by around 2.7% on a quarter-on-quarter basis and an uptick of 32% on a year-on-year basis. In Q4, the average price realization has also improved by 19.8% on a quarter-on-quarter basis. Average price realization for entire FY23 was up by 16.7% compared to overall FY22 as well. Bangalore sales volume for the company also was up by around 4.4% in Q4, which contributed to around 62.9% to the total overall area sold as well. So keep an eye out on this one. This stock is soaring high in trade as well.
Okay, moving on and switching spaces now, and let's talk about Lemon Tree Hotels. This particular counter is in focus, and I have a very short update on this particular counter when JP Morgan is seen to be reducing stake in this particular company, and they have reduced their stake from 3.23% earlier to 3% now, with a sale of 18.2 lakhs of shares on April 5. And on the back of this news flow, this particular counter is in focus. The stock is already down 13.5% in the past 6 months, but for today, clearly trading in the red with a cuts of almost 1% right now.
Okay, let's move on and talk about Bombay Dyeing. Kunal, when you look at this counter, has not done anything for the longest period of time. 1 year, 2 year, 5 year, it was only negative return. Finally, when I'm looking at the last 1 month chart, last 1 week, today also, it's buzzing in trade. Is that an indication of finally a good up move that we could be expecting here?
So as you correctly said, this counter came actually in limelight only because of, I actually picked up this counter because of the recent behavior. So now the previous bottom which I'm considering is of March 2020. The counter made a low of crazy low levels, that's around 35.40. From there it went to almost 150, and the recent correction which we witnessed, this counter came down by exact 61.8%, which is a Fibonacci retracement level as per technical theories. And from there, if you look at the last 2 weeks behavior, it's up by around 20%. The last week, previous week, it was up by around 14%. Today, it's up by 7%. So yes, it seems to be completely bottoming out on the weekly chart. Also on the daily chart, also the previous swing high is taken out. This can be labeled as a buy on dip counter, not aggressively at the present level. So levels to watch out for will be 65. From present level, if it comes down by around 4 rupees, one can initiate a buy on this, start accumulating this counter rather. The stop loss will be 60. I think this counter is almost bottomed out. We can see the levels of 85 to 90 in the quarter to come.
Moving on, in the stock number 31 that we have got for you, that is Max Healthcare, holding up a gains of around 3% right now. Makshi, tell us what are you picking up on this particular counter?
Well, Srishti, this counter is in focus after Motilal Oswal has initiated coverage on this stock. They've given a buy rating and a target price of nearly 530 per share. Now, what they're highlighting is that the company has a proven track record of improving the profitability of its hospitals. In fact, they're also saying that the demand factors for the hospital and in general the diagnostic industry is remaining quite favorable. They're expecting Max Healthcare to deliver nearly 16% of revenue CAGR in the next 3 years, while they're expecting a EBITDA CAGR of nearly 17% over the same period. Apart from that, they're also expecting a return on invested capital by the company of nearly 20% in FY25. So given all these positive factors, a big thumbs up has come in from Motilal Oswal. They've initiated coverage on this counter with a buy rating, and that is the reason why the stock is up nearly 3% in trade as we speak.
Okay, let's move on. And Sandeep Tandon, CII at Quant Mutual Funds, has started buying into select pharma names as well. Now, he prefers pharma companies than hospital companies. Let's go across and listen into his view. What are the companies that he likes?
It's a interesting point which you have brought, because we have also seen now pharma sector is now trading in that neglected zone which we generally look forward. Okay, so we exited from September 2020 from pharma. We have been adding some of the pharma names. Okay, so it's not very decisive right now, because in terms of earning potential it might take a quarter or two more. But if I have to look from a behavior perspective, as we generally look forward, stocks are trading in the neglected zone for a while, or I'll say some of the stock has reached the most hated zone also. Okay, people don't want to even touch pharma names. Rather, majority of the fund houses are actually exiting because they have been holding for these names for a while. So their patience is getting tested. So I think it's a good opportunity, but one has to be very stock specific there, because it's not that we are able to take that call. The sector has reached a bottom and then one should be. I think bottom fishing should be done in some of the individual names, and particularly those names which has been in neglected or beaten down and something is, or some trigger are expected. Those are the names which we are looking at. We are constructive on the hospital space, but only thing is that we have to look at the valuation. Some of the valuations still very, very stretched. Even some of the diagnostic companies, they have corrected a lot from the higher levels, but they are still not that attractive. So I will selectively, one can participate in the hospital space also, but I'm more constructive on the pharmaceutical, the formulation companies or the APIs company or the CAMS company. So more focus on the pharma companies rather than the hospital APIs.
Okay, so that was the view coming in from Sandeep Tandon. But moving on to more stocks in focus, and Ashesha, coming to you for the next one. You have picked up Reliance. This particular counter is not supporting the markets right now, trading at near day's lowest points. Tell us, what is the news flow coming for this particular counter?
Yes, Reliance Industries is in focus in the back of an Economic Times report. In fact, Economic Times has reported, citing sources, that Reliance Retail's arm is in advanced talks with Bovonto for manufacturing and distribution partnership to make and sell Reliance Campa soft drink range. Remember, this particular company is one of the largest cola brands in southern market, and Reliance's retail arm bought this company in about August 2022. The report also says that the deal, which is in advanced talks of closing, will give Reliance immediate advantage of Bovonto's manufacturing lines, as well as strong distribution outreach and a distinct edge over its competitors. So, in the back of this news that has come in with respect to Reliance's retail arm, Reliance Industries is in focus today. Remember, this is an Economic Times report citing sources.
Okay, that is Reliance Industries for you all. But Kunal, you know, Aarti Drugs, I was just looking at it in terms of returns right now. Last 1 year, 2 years, nothing. Last 1 week, 20% return. Today also it's up 5%. How is the stock looking like? Is this just the beginning of a sharp run up?
Absolutely. If you look at the whole performance right from August 2020 so far, it was in the down channel. Now this bottoming out happened actually on 20th of March. From the extreme lows of 315, this counter is now trading at 415. That's almost 33% gain from the crazy low levels. And the volumes which we have witnessed on the counter are very high compared to last entire year volume. That's the first reason to shortlist the counter. Second is on the daily chart. If you look at the candles, the three candles have been really sizable, which we call it as three white soldiers in technicals, which is again a very positive sign. RSI is extremely strong. It's a completely bottoming out counter right now. Risk reward ratio is favorable. Because this counter has run up so much in the recent past, we just wait for the counter to retrace a bit. I think 390, 395 can be a good level to watch out for. Buy on dip strategy can be adopted here. I think this counter with the stop loss of 375 can show us the levels of 450 to 475 in very short time now.
Okay. Keep an eye out on those levels for Aarti Drugs. Yes, we could be expecting a more bit of a run-up coming in there as well for Aarti Drugs. Let's move on, talk about RVNL. This continues to be in focus. Now, company has again emerged as the lowest bidder for Mumbai Metro Line B2 project of the MMRDA. RVNL had participated in with the consortium of Siemens India as well, and Siemens is the lead partner with 60% share, and RVNL consortium partners is with around 40% share. The cost of the project is around 378 crore rupees. Let's keep an eye out on this one. We've seen a lot of order wins coming in for RVN in the last couple of months as well. Today, holding on to gains of almost 0.7% in trade.
Well, we need one more counter that is seeing a lot of order wins. That is the large cap, from the large cap space, L&T. Look at the move in this particular counter. This particular counter has hit its all-time high level in today's trading session. And today itself, they've got a new order win for their hydrocarbon business, where they classify this project to be a significant order inflow that comes in to be in a range of 1,000 to 2,500 crores in terms of the new project order win. They have secured an order under their advanced value engineering and technology business vertical, and their order is for the license plus engineering, procurement and construction of a technical aluminium nitrate plant along with a weak nitric acid plant at their Rajasthan plant. And this particular order is coming from Chavan Fertilizers, that as we know is a leading fertilizer company in India. And if you will see L&T in the past 2 weeks, this is the 5th order win coming in for this particular company, and the stock is clearly soaring in trade today as well.
Absolutely, keeping an eye out on L&T. But let's pull up the charts for Concord, because Kunal is going to tell us about the technicals on this one. Kunal, is this the time to actually pick up Concord, or maybe we'll be seeing some bit of a correction that has been going on in the stock for some time?
So now if you look at the performance of this counter, again, it's been a clear down, underperforming counter, and the down rally actually emerged from November 2022, where the counter was trading at around 820 and we saw the extreme bottom of 555. So yes, the trend is definitely down. But if you look at the momentum on the downside also is narrowing down, and that's slowing down. So I think this counter may now make a bottom where, the bottom for the counter is very nearby. So watch out for the levels of 585. The presently it's trading at 578. We watch out for the levels of 585. Above that, one can initiate a buy. The stop loss will be 560. And I think this counter, if at all bottoms out, can be a good portfolio counter from here on with the risk reward ratio in mind. So yes, watch out for this counter. Stop loss being 575.
Okay, before we go ahead, just let's have a look at what the markets are up to now. When we started the show, Nifty was trading positively, but for now, Winnie Nifty 50 is almost trading flat. But for the Bank Nifty, look at the move that we are seeing. The stock is, this index is actually down 290 points, and that's a significant fall from its day's highest points, and a sharp fall coming in, especially in the last 5 or 10 odd minutes, Winnie.
Absolutely. 5-10 minutes we've seen a sharp fall, and not only that, the benchmark indices as well as the broader markets both have given up all their morning gains. Only Nifty mid-cap, when you look at it, is managing to hold on to some bit of a gain there, still that consistent part. But Nifty, Sensex or Nifty small cap all falling in trade, as well as Nifty Bank also down 0.6% like you spoke as well. But let's keep it going then with more stocks that are buzzing in trade. And Vamakshi, one more realty name, Ajmera Realty, also in focus on the back of its Q4 update.
Absolutely, you're right. It is in focus on the back of its Q4 update. The company reported that its FY23 performance has surpassed the peak sales of the COVID period, and with that, the company has managed to achieve the best ever sales performance with a nearly 93% year-on-year growth. The company's sales stand at nearly 834 crores for FY23. Now, robust sales as well as a good construction pace have resulted in the firm growing by nearly 35% as far as collections are concerned for FY23. Now, with the kind of momentum that they're seeing in the real estate space as well as the strong operational update that has come in, the management said that they will be doubling their launch pipeline in FY24, and that will be with the aim of garnering nearly 2,000 crores of estimated gross sales towards this effort. Apart from that, the management is also looking quite optimistic about their growth prospects. So given all these factors, we definitely have Ajmera Realty in focus. This stock is holding strongly in the green with gains of nearly around 6% as we speak.
On and then talk about some of the bank names. Yes, Bandhan Bank separately we spoke about it, but Goldman Sachs has come out with a report on overall the banking space as well, and some of the names that they have highlighted coming in this report is Kotak Bank, SBI Bank, as where they're maintaining a buy on it, while even for ICICI also they are seeming to be a bit of a positive side coming in there as well. Now they believe that the NIM headwinds are manageable, many levers to manage the profitability in terms of the cycle as well, and back the banks on resilient operating profits. That's the view coming in from Goldman Sachs on the banking space. Keep an eye on this one. Credit growth slowdown is cyclical in nature is what they are highlighting. So keeping an eye out on the banking space as well.
Okay, Goldman Sachs has Kotak Bank on radar, but Kunal, this counter is on your radar as well. Tell us which side of the trade you are sitting in for Kotak Mahindra Bank.
So again, if you look at this counter, it was underperforming, but recently it made a extreme bottom near 1645 and now trading at 1750. But this counter is right near to March 2023 high, and that's 1765. If it fails to surpass this level, which is 1765, I think from here we can again see a decline coming in. So it's a contra trade again. Keep the stop loss of 1770. Initiate a short on the Kotak Bank. I think this counter, if at all fails to surpass this high, can show us the levels of 1700. So with the stop loss of 10 points, the targets can be around 55 points.
Okay, that's the view coming in on Kotak Bank from Kunal, but that was this last stock that we were going to be taking for today in terms of market Fatafat. Thank you so much, Kunal, Vamakshi, as well as Ashesha. But viewers, don't go anywhere, because what we're going to be talking about is insurance players. Now, with 20% growth in FY23, private non-life insurance insurers have actually captured over 50% market share in the sector. PSU general insurers have grown just 10%, and their market share has come down to 32%. Let's go across to Anurag Shah, who's here to give us more details on this. Anurag, what is happening in the insurance space?
Non-life insurance industry, which comprises of general insurance sector and standalone health insurance companies, has shown a growth of 17% in FY23, with the premium has reached up to the mark of 2.41 lakh crore. So in this growth, private insurance companies has shown a good growth of 20% year on year as compared to FY22. Private insurance companies premium has grown up by 20%. And on the other side, PSU companies has shown a growth of 10% only. So market share of PSU companies has dropped from 34% to 32%. And on other side, the private insurance companies market share has gone up from 49.7% to 51.35%. Standalone health insurance companies has also shown a good growth. Standalone health insurance shown a growth of 26%, in which listed company Star Health Insurance has shown a growth of 13% in FY23. If we talk about the market share of standalone health insurance companies, then in FY22, market share of standalone health insurance company was 9.45%, which has gone up to 10.21. If we talk about the companies-wise performance, then market leader New India Assurance is still holding a premium of 35,487 crore. With a growth of 6%, ICICI Lombard has breached the mark of 20,000 crore premium. With so in FY23, the total premium was 21,000 crore and growth of 17%. So these are the overall numbers of non-life insurance industry performance in FY23.
Well, thank you so much, Anurag, for getting us all those details. But with this, it's a wrap to this edition of Market Fatafat. It's a goodbye from me, Winnie, and the entire team who put this show together. But viewers, don't go anywhere, because closing trades will take the action ahead. Thank you.